I want to talk about Synopsys. This is your electronic design automation company. This is a company where people use software to design semiconductors and chips. So it's the think of it as the AutoCAD or the CAD of this industry, right? This is how people actually design the chips as we're designing ever more chips and ever more specialized and custom chips, be it from NVIDIA or Amazon or Google. They have to use software like this. So it seems like it's perfectly positioned. But in the notes, I'm seeing a massive disappointment. What's going on?
Yeah, it's kind of like these past couple weeks, you get this beautiful steak that you're just drooling with all these returns, and then you cut into this grizzled piece of fat, right? That's what Synopsys earnings were in the past couple weeks, amongst what's really been a great market atmosphere in general. This is a difficult subject to talk about, as you can imagine. Synopsys isn't it's getting to pretty hard technology here, but I'm going to do my best to kind of try and distill this down into something digestible. The big news: their earnings were terrible. They missed last quarter. They took their forecast down next quarter. I saw the news, and the initial reaction was down in that 15, maybe 20% range. I figured that's where the stock would end up. That's a pretty normal reaction for a company like this to that type of news. But they were down 35% the next day. So even a little worse. I think they were trading for $620. They went down to $365. It was one of the biggest reactions I've ever seen. Since then, they've bounced back. They bounced back 13% the day after earnings, and they had great gains yesterday on the news of NVIDIA's Intel investment. You'll understand in a moment why that was. But they had a few weaknesses. Austin, we've specifically in this portfolio been steering away from companies that have outsized China exposure. And we've been specifically steering away from companies that there's a situation where the foundries, the companies that make the chips, it continues to concentrate down to Taiwan Semiconductor having a grip. Companies that have negative exposure to this, especially in making the machines that make chips, we've definitely have less of an allocation than I would otherwise like. Just this week, we saw news from the Financial Times that China's effectively told their companies they cannot buy NVIDIA chips. So, well, NVIDIA, there was this kind of quid pro quo where the export restrictions were lifted. China's now gone back and told the companies, no, actually, you can't buy NVIDIA chips. Synopsys is caught in the middle of this because their software was briefly limited towards China. It led to their customers there pulling back. And they're going to be more reticent to come back because they could come back to Synopsys, but all of a sudden in 6 months, they face similar restrictions. So they have some difficulties in the Chinese market. But the biggest reason, Austin, is Intel. and Intel, this is a doozy. Basically, the story is, as I know, there's only 3 foundry companies that have any consequence to building these leading edge chips. And that's Taiwan Semiconductor, Samsung, and Intel. As you can imagine, when you want to design a chip, there's going to be differences if you want it to be ultimately made on Taiwan Semiconductor's technology or Intel. Since Intel doesn't have customers for some of their nodes, they've been paying massive payments for Synopsys to essentially support them. This is wasted money, but it's also a deal's a deal. What happened is the new CEO of Intel, who's Lip-Bu Tan, where'd he come from? Synopsys' competitor Cadence, which is also in our portfolio. What does he do? He cuts this money, and also Intel previously was a Synopsys shop. They basically weren't dual sourcing between them. You would imagine he's also now going to move some of this business towards Cadence. So ex-Cadence CEO comes in, hacks his rival to bits. It's probably something that could be challenged in court, but what's Synopsys going to do? Who owns Intel now? The U.S. government. You can't burn down one of your main customers either because, you might need them in the future. So, Austin, the end outcome here, the reaction the day following was incredibly outsized. As I know, Synopsys went from $620 a share, $365. It's now, as we record this, it's closer to $480. That's probably a more reasonable reaction to this news. It's kind of a one-time bloodletting because of excess concentration in Intel, some deals that didn't have economic viability. But here's the good news. The thing that we own Synopsys for, their long-term, kind of cozy relationship with Cadence as the one and two in this industry, and the overall growth of semiconductors remains on track. So, this is a setback. I'm not going to be adding any more Synopsys, but it's a stock that I've said in the past. It's just kind of a pillar of the industry. It's something you hold that's going to have its ups and downs, but I think will be a winner over 5 years. I believe that still very much remains in play, despite how scary this situation was.
Boy, who needs Game of Thrones when you have corporate drama like that? Just coming in and knifing your competitor, and then you've got the government investing money, and then Intel's throwing you $5 billion, or I'm sorry, Nvidia's throwing Intel $5 billion. Boy, there's a lot of drama out there.
Game of chips. Game of
Game of chips.
chips.
I like that. I like that. HBO, pick it up. Pick it up.